All right, so we're going to get started with our next panel of the morning. My name is Doug Mavrinac. I'm the Shipping Equity Research Analyst at Jefferies, and I'll be moderating this morning's LPG panel, LPG ship owners panel. With me today are three esteemed panelists, all CEOs of leading LPG shipping companies, and rather than have me introduce them, I would like for each of them to introduce themselves and tell you guys a little bit about each of the companies that they represent. So John, can you get us started?
Hi, good afternoon. John Lycouris, CEO of Dorian LPG USA. We are in the larger sector of LPG carriers. They're called VLGCs. They carry about 84,000 cubic meters or 45,000 tons. And they usually go for long distance, big ton-mile ships. We have one of the youngest fleets. We just took delivery of our last ship in our new building program of 19 vessels. And we have now a fleet of 22 ships. And we are probably number 2 in the world in size, and look forward to employing the ship profitably. With high utilizations and good returns for the investors. Thank you.
Thank you, John. And then David?
Thanks, Doug, and thank everyone at Capital Link for inviting us here today. I'm David Butters, President and Chairman, CEO of Navigator Gas, sometimes called Navigator Holdings. We operate, well, basically the largest fleet of handy-size LPG vessels. Now, the handy-size vessels, 20,000 against the 84,000 VLGC vessels. But the handy-size, and they're called semi-refrigerated principally, they're much more complex and flexible than the very large gas carriers. They cost more to build because they carry not only refrigerated product, but they can carry pressurized product. We can carry petrochemical gases, and an array of various different cargoes and different tanks. So it's an extremely flexible vessel that carries both the raw material, such as propane or butane, but also in the petrochemical gases. And by that I mean butadiene, propylene, and some of our vessels carry ethane and ethylene. And with that, that's good enough summary.
Great, thanks, David. Harry?
And I'm Harry Vafias, CEO of StealthGas, and we are the largest company in the small size segment, so it's nice to have a company from each LPG sub-segment. We own 58 ships in that particular sub-segment, and we control 20% global market share. Thank you.
Great, thanks, Harry. Yeah, and you know, I had two reasons for doing that. One, just so you guys could hear from who you're hearing from this morning, but then also just to kind of highlight how within LPG shipping, it's not as commoditized as, say, dry bulk or refined products or crude oil tankers like you heard from this morning. I mean, each of these segments are a little bit unique and different from each other. And within that context, you know, about 1 year ago, we were all up here talking about, you know, the LPG shipping market and what was in store for the next 12 months. So my first question is, John, can you go through the VLGC asset class and describe for our audience kind of what has transpired over the last 12 months within the VLGC market?
Yes, thank you, Doug. The VLGC market has grown in size by a number of ships having been delivered over the past year. At the same time, exports from the United States have hit a record. We have exported about 22 million tons of LPG out of the United States. A very large percentage of that has gone very long distances, improving ton miles. There has been a shortage of shipping. We think that about 16 million tons of cargo went on large ships out of the 22. A very large percentage, about 34%, went to the Far East, means a lot of ton miles. And a large percentage went to South America, and a smaller percentage went to Northwest Europe. The employment of our ships has been well over 90% in utilization, and we've seen a great market this year.
Thanks, John. And David, you know, this morning there was a lot of people, you know, talking about how bad shipping is and everything else, but for you guys, last year was pretty darn good. What happened last year that made things so good for you guys?
Well, nothing different than has really happened over the last 10 years. It's a steady business, less volatility in the handy semi-refrigerated space than the VLGC space. And the reason is that we have a diversified product mix, as I mentioned earlier, and we carry no specific trade route. In other words, we're not carrying high volumes from the United States to another destination. It's a global business. We have a lot of vessels in the North Sea, a lot of vessels in the Mediterranean, Indonesia, Latin America, and of course we do export out of the United States. But our business over the last 12 months has been steady. We've had roughly 97% utilization. Then that's historical. If I go back 5, 10 years, 95 to 97% utilization has been our norm in spite of the growth of our fleet. 30 vessels now, and we expect to have 38 by the end of next year. It's a mix. The steadiness is because of the flexibility and because of the various cargoes that we carry. We don't carry one specific cargo. It's more of a challenged business technically and commercially than perhaps, not to put down John's business, but because it carries so many different cargoes in different directions and different smaller places, that it is a complex business, and that gives, I think, us an advantage when we have a broad fleet.
Okay, and Harry, what about you guys? How are things any different today than they were 1 year ago for the smaller ships?
Unfortunately, our share price is directly correlated to the price of oil. So despite the fact that the company is doing pretty well and has only 30% debt to cap, despite a huge expansion that we have done over the last 3 years with 15 new ships being added, and having the majority of the fleet on period charters, thus earning steady income, our share price has fallen together with the price of oil, which is, a bit weird because obviously, okay, I understand it's energy and people want to sell energy-related stocks, but at the end of the day, the investors should look at 3, 4 things, and if those we tick those 3, 4 things, then I think it's a safe bet. I mean, investors should look: does the company have too much debt? Does the company have low break-even? Does the company have a fully financed order book? Does the company have a lot of pre-contracted revenues? If the answers to all these questions is yes, then your downside is limited. So we are a bit frustrated that we've done all these things and we're trading at a quarter of NAV. So, I think it will change, and the price of oil will change, so it needs patience and, hard work in the meantime.
Yeah, and actually that brings up a great point. Obviously, we've seen a high degree of correlation between oil prices and the share prices of each of your companies. So my next question is, and it can be a very short answer, has the decline in oil prices impacted the LPG shipping market in any way that you've seen, John? I mean, either directly or indirectly, have you seen the business change because oil's at $40 instead of $60?
Yes, it's made a substantial difference in our market because LPG has moved in tandem with the price of crude. And as a result, LPG has become much cheaper. It has gone even lower than we would have expected. Usually LPG trades at 40% of the barrel, 40% price of the price of the barrel. But it went as far low as 25% of the barrel cost. And it has recently rebounded substantially to about over 40% of the barrel. And we also have seen a substantial draw in inventories in LPG in the United States. It has been, last time I was here, I was talking about very high inventories in the United States. Right now we had a 40 million barrel draw in those inventories. There were over 100 million, now they are probably around 60 million. That shows that notwithstanding the fact that production has been cut back in LPG, we have seen a very significant draw in inventories. That speaks for itself.
Yeah, gotcha. And David, for your size ships, how has the change in energy prices affected, the fortunes for your mid-size ships?
Over the past 12 months, it has had virtually no impact in our normal trade. And that's because it's so, again, repeating myself, but it is spread out around the world. It wouldn't have had any impact in the business we do in Indonesia, which is arbitrage, supplying heating oil to the various islands. It wouldn't have had much of impact in the North Sea, where we're moving propane out of Russia into Europe or Venezuela. But where it does have an impact, the price of oil, in the longer term, is the impact on major projects, particularly in the petrochemical space. That again, we are an important petrochemical carrier. And to the extent that there's been uncertainty in the price of oil, that new projects that might have been developed in China or in Europe, particularly where they're so naphtha dependent, those have been slowed down because of the uncertainty in price. Stability in the price of oil will create a rebirth of those projects, but it needs stability. So for a longer term, I think that the volatility, not necessarily the level of the price of oil, but the volatility and uncertainty in the price of oil on the longer term has probably put some of the projects on the back burner that we would be looking for 3, 4, 5 years out.
Gotcha. And Harry, you kind of introduced the topic, so you kind of gave us some of your thoughts, but do you have any final thoughts on the topic of oil versus the fortunes of your ships?
Yes, we see sometimes the problem of substitution. Not a lot in the household usage, of course, of LPG, because when you're supplying small towns where there is no electricity and these people use a small gas canister like we have for our barbecues, these people cannot, because oil is cheaper, just switch to oil. They will continue to use those gas canisters and LPG. But in some industrial uses, we have seen people switching from LPG to oil if it's become a nice, cheap alternative. But we don't think that will last for very long, and therefore I think it's a temporary disruption.
Gotcha. And then John, as you look out over the next 12 months, what sorts of things do you see on the horizon that you think could impact the demand to ship LPGs on a VLGC? What are the biggest demand drivers that you see coming up?
Well, the major driver will be, of course, more volumes going into the Far East on larger ships, which we have seen the beginning of this first few months of 2016. We believe that there will be probably lower domestic consumption in the United States, which means that more LPG is going to be released and go for export. Also, the switch of many of the steam cracking that has been done on cheap propane will probably switch now to other, like ethane, and therefore that will release more LPG for export. We believe also that a delay in the Panama Canal opening would also provide more cargoes to move longer ton miles, quite a distance. And even if the production in the United States increases, that will help making more LPG available for export. As prices of crude oil come up, probably LPG will, as it has already, move up, and therefore will fuel export of LPG.
Gotcha, thank you. And then David, you guys move a whole host of different types of commodities. What do you guys see in the LPG market, the ethane market, the ethylene market? I mean, what do you see on the horizon over the next 12 months that you think could most greatly impact the demand for your ships?
There won't be a great deal of change over the next 12 months. There is nothing that it will be dramatic in the markets that would move us one way or another. What we're doing now, I expect we will be doing over the next 12 months. However, if you look beyond that, then changes take place, because what we're doing is seeing a fundamental change taking place where raw material, the propane basically, is being upgraded to different other commodities, propylene and so on. And the petrochemical side will develop, and that's the game changer over the next 2 or 3 years. A movement away from the basic core hydrocarbons of propane and butane into the petrochemical space. we're seeing already a movement of ethylene out of the United States in volumes that never existed before. In fact, ethylene never left the country. Today, we're doing a fair amount of liquid ethylene out of Targa, going to the Far East, which is, and you think of that, you can think of what the future is going to be like as the United States builds out its petrochemical base built upon cheap U.S. hydrocarbons. So the short answer is no dramatic changes over the 12 months. Steady business around the world where we operate, but a gradual change, a fundamental change relating to a structural movement into petrochemicals away from the raw material. And that's a story that takes place 2, 3, 4, 5 years. It's not a short-term story.
Gotcha. And Harry, what about for you guys? I mean, what do you see on the horizon that can most greatly impact the demand for your size assets?
I think because demand is quite difficult to predict, the investors and we should focus on supply. And I think that a lot of investors lost money in different segments, not LPG now, because they didn't really look carefully at the supply of ships. We have seen a lot of value destruction because people ordered too many ships, and too many ships fell in the market at the wrong time, and that, in conjunction with lower economic activity, led to the problems we see now in companies, facing cash flow problems, and we see scrapping of ships, very young scrapping of ships. So in the LPG sector, thank God, we have seen the supply of new ships slowly decreasing. We haven't seen many new orders. But we've been lucky because our order book, the order book of the small size segment, has all delivered in 14 and 15. Thus, in 16 and 17, we have a total of 12 ships left to deliver in the global fleet. In the larger ships, we still see quite a big order book, which is worrying. We hope that some of those ships will be canceled. We hope some of those ships will be pushed back. We hope some of the Chinese yards not performing. But it is a worry that people look at. The economy is not doing well. China is not doing well. Europe is not doing well. That doesn't help. But at least for us, 20% of the fleet is over 20 years of age. So sooner or later, those ships will leave, and thus it will make way for the newer ships.
Gotcha. And actually, just like the oil brought up a transition in my line of questioning, I actually wanted to go to the supply side of kind of what impacts the market. And so, John, Harry brought up some good points about how the order book is declining, and we know a year ago that the order book for VLGCs was very significant. A lot of those have started to deliver. So my question is, when you look at the VLGC order book, how has the order book changed? And how do the next 12 months look in terms of what you expect from a fleet growth standpoint within the VLGC asset class?
Yes. There are about 70 ships still on order. About 45, 46 are going to deliver this year, and the rest in 2017. We have seen that increasing amounts of LPG move out of the United States, which means ton miles. We expect that export drive to continue. It's been growing at about over 2 million tons a month out of the United States, as against 1.4, 1.5 last year. So I think we are going to hit the capacity limit of the export terminals this year again. And I believe that we're going to hit probably somewhere in the 25 to 30 million tons of exports. So that speaks good for the oncoming fleet of ships. We do have some terminals that will come into operation later this year. And one of them is Marcus Hook, which is loading its first VLGC this weekend and this week. And we're going to see probably more ships coming out of Marcus Hook in the large size. We're also going to see Phillips 66 coming in the market later in the third and fourth quarter of 2016. And also we have seen the west side of the United States up in Ferndale, substantial amount of cargoes coming out of there, which is a very important part of the export drive of the United States. So overall, it looks like a rosy picture, and being able to employ the additional ships. There's going to be some overhang, I'm sure, but we should not forget that the fleet, as it has increased, it has also gotten older on the other side.
Right.
And I'm looking at about 35 to 50 ships of being over 20 years old.
Yeah.
And these ships are not competitive, and they cannot carry the cargoes that our ships could carry, and they are not eco, of course, in performance, et cetera.
Gotcha.
So I believe that there is a good underpinning.
Okay, and just for perspective, how many VLGCs have been delivered that the market's absorbed over the last, say, 12 months? I mean, it's a pretty decent number that has already been delivered.
It's over 50 ships.
Right, gotcha. And then, David, within the handy asset class, how is the order book looking? How does it portend for future fleet growth over the next couple of years?
Well, ship supply is always the killer, no question. And in our space, we see a continued growth in demand for ships. But there are 33 vessels being ordered in the handy size, and that's a lot when you consider the base of about 110. Can they all be delivered? Harry pointed to the suspicion that some won't. Well, it has to do with a particular yard in China that has publicly stated that they're having trouble, financial trouble, and may have delays, significant delays, and there are about 13 of those 33 vessels being built in that yard. Eventually they may be built or they may be canceled, but assuming they get delivered on time, 33 will be a challenge, but I think the expansion of the core business around the world, and it's not in the handy space, it is not dependent solely at all on the U.S. shales. It's dependent upon a global development, including exports out of the Mideast and a broadening and developing petrochemical business. So it is a challenge, but I think it can be met, but it won't be without its uncertainties.
And Harry, what about for your asset class?
I've already said we are lucky because we are a step ahead of the rest, meaning that we've swallowed 90% of the order book. So we have only 11 ships for 16, 5 ships for 17, and a single ship ordered for 18. And with the market as it is, I doubt it if anybody's going to place any orders. We have the bonus of 20% of the small size fleet being over 20 years of age, as we said. So, if the market continues to be weak, surely a big chunk of that will be gone. So on the supply side, we're not worried. We're more worried on macroeconomic stuff and the global economy. On the supply side, I think the biggest wave of new deliveries has already passed.
Gotcha. And then, John, just to get back to you on the supply side before we put it all together, David mentioned a number of potential surprises in the form of non-deliveries from a particular yard in Asia. Do you see the prospect for any non-deliveries within the VLGC asset class as well?
I have not seen any yet or heard of
Okay.
any. I know that on that smaller size, on the MGC side, there has been some hiccups and delays and perhaps cancellations.
Okay.
But I have not seen anything
Gotcha.
on the larger ships.
Gotcha. So then, trying to put it all together, John, you described the outlook as rosy with the number of ships being delivered capable of absorbing our demand growth. And David, you had talked about how, things aren't going to change too much. But I wanted to drill a little bit deeper on that topic because things have been pretty good. So they really don't need to change too much. So are you talking about, when you say not changing much, are you talking about continued strong demand growth, 10-ish%, something north of that, before you see a kick up in the trajectory with some of the ethylene and petchem stuff coming online? Or what is your demand outlook, and do you expect the handy order book to be absorbed by your demand growth?
Yeah, I expect that the demand in the handy space, what we're doing, carrying about 150,000 barrels of product in our vessels, both refrigerated and ambient product and in a mix, the demand side should grow as it has grown for 5 to 10%. Not spectacular, but very healthy. We will continue to see an incremental gain out of the United States on top of that, simply because of the shale and the opening up of many new terminals. But we're also seeing some delays on terminals, particularly in the Marcus Hook, where they seem to be delayed on the expansion, which will be pushing things back a bit. The growth in demand should be able to absorb the 30-some-odd vessels. I'm always hesitating because it's a mix of change. It's not easy to predict the handy space and with the semi-refrigerated vessels because there are so many different places that open up and many new trades that develop. And you cannot predict, as you can with the propane out of the United States, how many barrels that are going to come out over the next year and therefore how many ships. So I think we can absorb the 33 over the next 2 years because that's the length of time. And should those 13 not be delivered, well, that's a game changer for us. But we're going to build and run our business assuming those 33 vessels are in fact delivered, and we'll have to deal with them.
And then Harry, I mean, are you optimistic for the outlook for, how the demand and supply are matching up for the smaller vessels that you operate?
As I said before, I mean, demand is pretty steady. I told you before that 2/3 of what we carry is for household usage, and people cannot stop cooking their food and heating their homes. So that will not change. It's pretty much inelastic. Supply side, we are pretty confident because the order book is small and we don't predict it to grow. A big chunk of the fleet is old. So again, I cannot guess when those ships will leave, but you cannot keep, if you're bleeding, you cannot keep subsidizing those ships forever. And don't forget, every 5 years you need to spend a significant amount to pass through special survey. I'd like also to add that what is important is quality. And I'm very happy that all three companies here have invested in quality ships. It could be very easy for us to go to China, to second-tier yards and order our respective fleets at 10 or 20% less. But we would have problems with our charters and would have problems selling the ships 5, 10 years later. So all three companies here have had the strategy of betting on high-quality ships and keeping a strong balance sheet, and that's why in the middle of this very bad shipping environment, we're all strong and we're all looking at growing further and buying back our own stock if we consider that to be cheap. And we, because we're trading at such a big discount to NAV, we've bought already $20 million worth of our own stock, and we will be spending another $10 million on top to continue to buy back our own stock.
Gotcha. And then we just have a few more minutes, so I only have a couple more questions for you guys. And one has to do with the way that you choose to employ your vessel. So we're all quite optimistic on the outlook of the market. When you look at that, your outlook and you look at what the charters are telling you in terms of, time charter rates, depth or liquidity in the time charter market, John, how do you guys think about, spot versus time charter, and what sort of time charter market are you seeing out there? I mean, are those rates basically in the duration equal to your optimism, or what are your thoughts on employing your assets given your outlook within the context of the market, the time charter market itself?
Yes, the market on these kind of ships has been mainly steady. It has not increased or decreased. We always look for quality counterparties. We would like to have somebody who is creditworthy and reliable as a counterparty. We continue to be interested in that. And then on the other hand, we have developed the Helios LPG pool, which is 1 year old, has employed all our spot vessels along with MOL vessels in the LPG space. So we have created a large size of pool that specializes in spot charters, and it has done very well indeed. We are expanding that pool with the addition of additional ships. Recently we announced something like that. And we believe that being able to balance the spot with the time charter is a very good and conservative way of going forward.
Gotcha, thank you. And then David, how do you think about balancing that outlook with the time charter market?
Oh, I would love to have long-term contracts, but that's not the reality in the handy-sized vessel fleet. They're just not there. Our customers typically are traders, and they're short-term oriented. A long-term contract in our handy space is 1 year. Now, that's a tough thing, but if you go back over 10 years, you'll find that our utilization has never fallen below 95%. Now, I'm not going to tell you how we do that because we got some competition around, but we do it. However, as we move forward, our business will be shifting. Our business into the petrochemical space, it's a natural evolution, and there is an opportunity to get long-term charters. So our strategy, quite frankly, as we move into the petrochemical space, that we will, as it moves to us, because that's what's happening. That business is moving to us, we're not moving to them. And as it does, we'll be looking at long-term charters. A good example of that is the ethane or ethylene vessels, where we're not doing anything unless it has a long-term charter attached. So that is our strategy, is to move gradually, although we will remain in the handy space as a business that just lives on a day-to-day basis, and you live or die on your ability to keep those vessels moving.
Gotcha. And then Harry, for you, I mean, any increase in demand on the part of charters for your ships, or?
The same with David. We don't have, in our business, we don't have long-term charters. Again, long is considered 1 year. Mm-hmm. So it's mostly 6 months to 1 year charters plus spot. But we have succeeded in getting 7 ships on 8-year charters, which I think was an exception. So we're very happy for that, because that is, constant income for our bottom line. But generally speaking, we will stick to short-term period charters.
Gotcha. And that does it for time, and we can take a question or two if there are any from the audience. No? All right, I think we're done. All right, thank you very much.
I think it's terribly important that Capital Link has organized this event, because shipping, while it is a dramatic international business that's been forever, is probably one major industry that's not fully understood by investors. Getting together on a day like this, through education, panel discussions, and individual presentations, makes it more understandable and broadens the base to create additional capital for this critical industry to expand and prosper. Without this, investors would not fully understand what they have and what the opportunities can present themselves. And thank you very much.
We are very happy to be here at Capital Link. As always, a very good function, bringing together a number of owners and a number of investors. This is probably one of the better events that we attend. There's always a very interesting lunchtime speaker who is presented, and we always enjoy to see people from our own business and from our own sector, as well as investors. We have a number of meetings with investors here, and we do a company presentation which has been really successful and well attended. And we definitely have it in our calendar every year to attend this forum. The panel I attended was an LPG panel. It was well represented from the various sectors of the LPG market. It was conducted by one of the very well-known analysts, and we covered a number of issues, and it was, I think, a good way for an investor to see the sectors and to understand the importance of each sector and what each sector is focused on. So I think it was really well done, and I enjoyed being on that panel. Nicolas Bornozis has been a great force in the New York market, in the New York scene, and bringing together not only shipping companies but investors from various areas, and we are delighted to have him being able to organize events like this, because I think shipping benefits from events of this nature and brings them a little bit more to the forefront of the business. So we thank him very much for his continued work and for his success, because having been for 20 years in doing this forum, it has been an amazing feat, an amazing job. Well done.